Welcome to the Debt Crisis Problem Podcast, your source for insights into major risk events that could trigger an economic downturn and debt crisis. Today we're discussing a key risk, inequality in wealth and income. Our goal is to create awareness and spark a healthy debate for the average citizen. The world is too fragile to wait. We need fresh candor and common sense. A debt crisis looms due to unsustainable debt and deficit spending everywhere. It's time to wake up and speak up. Let's get started. When push comes to shove between the haves and the have-nots, how well off do you consider yourself? According to Neil Godfrey in June of 2023, in the article, Are You Rich?, this is a question that many people ask themselves in quiet moments, but would never have enough nerve to say out loud. What is the magic number to be considered rich? And what are the U.S. wealth percentiles? According to Schwab 2023 Modern Wealth Survey, its 7th annual, Americans say that it takes an average of $2.2 million in net worth to qualify a person as being wealthy. Net worth, of course, is the sum of your assets minus your liabilities, what you owe. People with the top 1% of net worth in the U.S. in 2022 had $10.8 million in net worth. The top 2% had a net worth of almost $2.5 million. The top 5% had a $1 million net worth, and the top 10% had almost $900,000. The top 50% had just over $500,000 in net worth. And who owns the vast majority of the U.S. stock market anyway? According to an article by Jennifer Soul in January of 2024, so it's a little while ago, she says the wealthiest Americans have never owned so much of the stock market, with the top 10% now holding a record 93% of U.S. equities. Americans broadly have been participating in the stock market at a higher rate, with a record 58% of households owning stocks in 2023. Still, stock ownership is skewed toward the top. By comparison, the bottom 50% of Americans own just 1% of all stocks and mutual fund shares. While the pandemic period drove a rise in retail trading, as Americans had time on their hands working remotely, as well as cash to put to work from U.S. government stimulus checks, it doesn't seem to have tilted ownership much further away from the richest Americans. Some experts have also said that many retail traders cashed out during the brutal bear market of 2022, unable to stomach steep losses. In any event, stock market booms have traditionally produced the largest rewards for those who are already wealthy. That's because the wealthiest U.S. households have most of their assets tied up in equities, while most middle-class families have had their assets tied up in housing. In late 2022, the bottom 50% of households held $4.8 trillion of real estate, but just $0.3 trillion worth in stocks. The top 1%, by comparison, held over $16 trillion in stocks and just over $6 trillion in real estate assets. Stocks have also seen monster returns over the past 10 years, when interest rates were ultra low and helped drive handsome equity returns. Over the past decades, the S&P 500 rose by 155%, with the benchmark index gaining 24% the last year alone, largely fueled by cooling inflation and expectations from investors for Fed rate cuts in 2024. Wealth and income inequality outlook is uncertain. It is doubtful that anyone would think that throughout the world, the rich are not getting richer, and the poor are not getting poorer. In today's world, we now have the super wealthy, and many believe this has a detrimental impact on democracy itself. They may feel that the super wealthy are too powerful and own too much. Most people likely feel the gaps in income or wealth between richer and poorer households continues to widen. No doubt that the COVID-19 pandemic after the pandemic passed, the very wealthy people had even more wealth, while many others have had their employment disrupted, their incomes hit hard due to inflation, as well as their purchasing power. Their wages likely haven't kept pace with inflation. For many, these inequalities in wealth and income have become an issue, if they were not already an issue. Is this inequality due to the globalization of goods and services, technological advancements, and U.S. governmental policies and decisions? And so what is it? So what if this disparity continues? Is it conceivable, some might argue, that such inequality could lead to social unrest and even political instability? For any number of reasons, millions of people are born into poverty. As they grow up, they are less socially mobile and will find it very challenging to climb the economic ladder. All this will eventually breed distrust in the system as the rich get richer and the poor get poorer. The forecast for the future of wealth and income inequality is uncertain, and the disparity is not going away anytime soon. People may also become disenchanted with political leadership whom they feel mainly seek power and wealth over the needs of we the people. Wealthy corporations will continue to lobby and make political donations to political parties with the expectation that legislation will be passed that is favorable to the corporations. And then these businesses become very wealthy and more contributions will be made to the politicians who, somehow or another, also become very wealthy too. This short ad is sponsored by the TunaBudget.com podcast. Hey friends, looking to improve your personal and family financial wellness? Don't miss the Tuna Budget podcast at TunaBudget.com. Download your free Tuna Budget worksheet plan, the most powerful budget worksheet plan in the world, yours. In addition, dozens of Tuna Budget's human-side candid conversation memos may be the perfect answers you're looking for. Join us for real candid conversations and candid questions that can change your life for the better. Subscribe to the TunaBudget.com podcasts and empower yourself to take charge of your future and financial well-being. Next, I want to look at a study of how people feel about economic inequality. This was published by the Pew Research Center in January of 2020. Household incomes are growing again after a lengthy period of stagnation. Upper-income households have seen more rapid growth in income in recent decades. Income growth has been rapid for the top 5% of families. The wealth of American families is currently no higher than its level 2 decades ago. The wealth divide among upper-income families and middle and lower-income families is sharp and rising. The rich are getting richer faster. Income inequality in the U.S. has increased since 1980 and is greater than in peer countries. About 6 in 10 Americans say there is too much economic inequality in the country. Most who see inequality as a problem say the economic system needs significant changes. Most who see too much economic inequality say some amount of inequality is acceptable. Healthcare and drug addiction are seen as more pressing problems than inequality. Lower-income Americans are more likely than other income groups to say reducing economic inequality should be a top priority for the U.S. government. For those who say reducing inequality should be a U.S. government priority, large majorities point to unfair access it affords the wealthy and limits it places on others. More Americans cite outsourcing than automation as a contributor to economic inequality. Republicans are about twice as likely as Democrats to cite different life choices people make as contributing a great deal to economic inequality. 6 in 10 Americans say most people can get ahead if they are willing to work hard. About 2/3 who say there's too much economic inequality say the U.S. government should have a lot of responsibility in reducing it. Republicans and Democrats largely disagree on how effective different measures would be at reducing economic inequality. About 8 in 10 U.S. adults say there's too much inequality. They see investment in education and job training for the poor as a better way to address it. Most Democrats and Republicans who say there's too much economic inequality say the U.S. government should raise taxes on the wealthy to address it. Most across income levels say the U.S. government should not raise taxes on people like them in order to address economic inequality. And lastly, most U.S. adults say the U.S. government has a responsibility to provide health insurance and adequate medical care for all Americans. Interesting study. In conclusion, so what, when, how it affects you? We, the people, are a money-hungry and risk-taking group, aren't we? If I didn't know any better, I'd say that we, the people, those with money, like to roll the dice. Would you agree? Isn't it all about money? And the more, the better, right? With that high-reward mindset comes high risk, too. Stock equities and real estate holdings account for probably most of the wealth and net worth of individuals in the U.S. What could possibly go wrong with something like that when the U.S. experiences a debt crisis? In 2025, I believe these asset classes, well supported by asset bubbles from inflation, will take a hit, possibly the likes of which we've not seen in modern times. In my opinion, it is only a matter of time. Investing in the stock market today, practically everything we do these days, is not fundamentally focused like the good old days, with any kind of disciplined investment plan. It's more like a gold rush mentality, so it's very high risk. Do our tax returns not show an insatiable appetite for more and more, year over year, generally and eventually with alimony and child support showing up along the way, as well as gambling losses? We, the people, will continue to believe that more and more means happiness, when it generally results in the loss of the most precious and important things in our lives. Money will give pleasure, sure, but not happiness, especially for the long term. Such will continue to be the trend in the near term. Down the road a bit more, there will come a time when those that have wealth, the ones that understand what the highest and best use of it is, will use those resources to assist those who are poor and less fortunate. And for those who cannot take care of themselves at all, we the people will take care of them ourselves. Those that want none of that will simply build up their fortunes unto themselves, and when they die, they will leave it all here anyway. Meanwhile, the U.S. government will continue to dole out untold billions of dollars to take care of tens of millions of people, and most of it will be added to the national debt pile. Can you smell a debt crisis yet? Thank you for joining us. Today we have explored inequality in wealth and income, a major risk contributing to the looming debt crisis. We hope to highlight the urgent need for transparency around these risks. We want to hear from you too. Submit your own debt crisis memo and share your thoughts at tunabudget.com. If you found today's episode valuable, please subscribe for future podcasts. Your support helps us grow this healthy debate. Until next time, take all necessary precautions. Your financial wellness matters. Thanks again.